Are we in a stock market crash? I hope not. However, there are some indicators that indicate that we may be in a recession already. We're going to jump into how we're doing in the S&P 500 year to date, how the different sectors are performing, and what interest rate cuts look like going ahead. And hey, should we stay in the market long or sell thinking the market may go down? We're going to jump into the trades on the live option trading platform and go through those as well. Before we get started, if you appreciate the time and effort that goes into making these videos, go ahead and hit the like and subscribe button down below. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a link to a paid course if you want to dig in deeper to the options and get the most bang for your buck. Use the link below and open an account with Mumu. You can get 8.1% on uninvested cash and up to 15 free stocks. You also get the free charting software that's great, and I use it every day. It's a zero commission online platform brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, we started the week in the S&P 500 at 54.59 on the SPX, and we are now down after the 5-day week to 53.46, so down 2% last week. We're still up year to date 12%. We started the year at 47.43. So the forward PE is now 20, so it's still slightly above the 10-year average of 17.8. Last week, we had some economic data that came out. The big one was the U.S. unemployment rate. Came in at 4.3%. You can see right here on the market watch, 4.1% was expected. So this really triggered what many people think is a recession that we may already be on the verge of. So there's the bull argument that it's a good time to buy, and bearish that, hey, we're entering a recession going forward. Next week, there's not too much coming out with as far as economic news. If we look at the 5-day for last week, the different sectors, you can see that 2% down in the S&P. Consumer discretionary was down. Technology was down the biggest at 5%. And then utilities up 4%. So people run to utilities when they think there's going to be a recession or a big market drop. Energy was down big as well last week. Year to date, though, everything is still up. Wow, utilities is up 17%, healthcare 10%. Tech now came down to 6%. It was way up, leading the way. And communication services is still up pretty high. If we look at interest rates, we are at 5 to 5.25, 78% chance of keeping that, or for September, of a rate cut in September, the first one. We're at the rates are 5.25 to 5.5 right now, and then a second rate cut, 4.5 to 4.75 in November of this year is expected, and then even in December, going down, better chance, 45% chance of 4 to 4.25. So continued rate cuts with the unemployment rate going up and inflation coming down more in check. It looks like as of Friday that these rate cuts are being priced in now. So the big thing here that I want everybody to be aware of is the fear and greed index is now down to 27. So a lot of people do think that we're entering a recession now. So is that the time to buy or sell? I'll let you know what I'm doing. If we look at the FactSet Earnings Insight report and we go to page 1, we can see the earnings for Q2, earnings growth rate of 11.5%. So earnings have actually been pretty good so far this year. So that's not the issue. The unemployment's the problem right now. And then if we go down here to page 14 on the report, we can look at the forward expectations, and you can see Q3 analysts are projecting earnings of 6.1, down from 6.8 last week, and revenue growth of 4.9, down from 5%. And then for calendar year 2024 overall, 10.8% and 5.1, not a big change there. and then for calendar year 2025, 13.5 and 5.9. So still good growth rate expected moving forward. But if we jump into the trades on the trade platform, um, first one is Airbnb. I love this stock, Airbnb. They've got earnings coming out uh, next week, Tuesday after the bell on the 6th. So let's hope they are good, because we had to move down in the stock to 128, and we've got a 145, 135 put spread on. So you can see we're profitable down to 140, but we need to move up now after the big drop on Friday. But hey, worst case, my target for Airbnb is much higher. It's like 170. If you look here, um, they've got 152 as a target here from 128. That still puts us in the profit zone. But I mean, look at the financials on these guys. Uh, very solid income statement and balance sheet going forward. And then, like I said, higher forecast from everybody out there. And I like Airbnb going long. So we'll see how they do with earnings, but they've got huge free cash flow going forward. The next one, AMD. All these tech stocks that I have took a hit. So AMD is down 155, 135. I've got a $20 wide. I rolled out to September, so I'm 47 days out right now, which is fine. We've done well in AMD. I mean, still with the drop last week, uh, we're still doing okay in AMD, but we're down right now. And if we look at the trade, we're profitable at 145. So we need the stock to move up about 15 bucks. But high IV rank right now. I'm not going to add more. I'm going to see how things work out with this new recession move. But on July 30th, they beat on both the top and bottom line on earnings. So it's really the macro economic factors that are coming into play. But if you look at the long-term target, everybody's got it. All the analysts have it as a buy. They've got their target at 187, way above where it is. So I'm just going to continue to roll my put spreads. So, you know, that's the nice thing about trading options this far out, 30 to 45 days. Once you get inside that $20 range, you just roll them out to the next month and collect more premium. So that's what I do. I talk about it in the options workshop and the course as well. Amazon, another big tech hit, 167. We've got put spreads on, same situation. We're profitable. We need it above 180. We're at 167 right now, but they are a behemoth. And, this is a buying opportunity. So I'm still going to get long. Target for them, 220. Mine's 225. They're right there. Everybody's got it a buy rating. So it's just a matter of coming out of this, as soon as we find out that we're not in a recession, or whether we are, we just roll until we get out of it. That's my plan with Amazon. Avago, which is Broadcom. A lot of people are recommending this over Nvidia because it was up, but now everything's down with the tech hit last week. So we're at 143, and we've got put spreads on. Same situation. We'll continue to roll and wait for the market to move back up, which it will. It's just a matter of time. And again, everybody's got it to buy 180 target. It's at 143. So if you don't have these now's a good time to put on some put spreads or buy the stock if that's the way you work. Either way, DraftKings, I sold I bought back my calls that I sold again in this poor man's covered call. I have a leaps option and poor man's covered call. So I bought back my call option in DraftKings, and we've been doing well in DraftKings. See, we're still up 365 in the last 30 days, and over the last year, we've made over $3,000. So DraftKings has been very good to us, and I expect it to continue to do well. And I just do the poor man's covered calls. So on any big up day, I'll sell out another call option. So if I were to go to the table right now and look at it, we already had earnings, but you could sell a call option right now at 34. Actually, I'd go out further, maybe 35 and collect $1.40, which is $140. So I'm going to go ahead and actually I'm going to put it above the market and see where the market opens Monday morning. And I'll put this on until canceled, review and send, place the order. Okay, I've got that as a placeholder. So on any up day, I'm going to sell a call against my leaps option. Any down day, I may buy another leaps option. But for DraftKings, again, target 52, a lot of buy ratings. Their balance sheet, super solid going forward. Gold, I've been trading that in between a range of 217 to 225. If you look at the curve mode here, you can see the profit range. We're still in it at 225 and we've had to move up. So we just want it to stay within this range until the expiration date. And you can see it's been trading in a range. It's at the top end of it right now. So just looking for it to come down a little, but with the recession, it may move up. In that case, I may move up my put side to collect more premium. Google, again, I'm long Google. I love these stocks long term, so I think they're buys and staying long. We just got to get confirmation of the soft landing or recession. But 166, big drop on Friday. And again, we've got the put credit spreads. We're profitable down to 175. We need a $10 move up. So any good news coming out will help us. But Google's been good for us. They're the king. I mean, they own everything. So I like Google long term. My target's 200. Yeah, they've got 190. Everybody's got it to buy. So I'm staying long Google. And they beat on the top and bottom line for Q2 earnings. IWM is the Russell, so it's the small caps. And there's two sides to the story on this one. So small caps will do well during interest rate cuts. However, during a recession, many of those companies may go out of business. So that will weigh on it. So there's two sides. It will do well during interest rate cuts, which we have coming, but the recession will hurt the small caps. So I have a put spread that I put on last week a little bit too early. I mean, now would be a good time probably to put it on, but now I'm looking at trading the other side on Monday. I've got a call credit spread in to collect. It would pay $146 right now. I put it above the market and I'll adjust that going forward next week. Lennar is a home builder. During interest rate cuts, Lennar should do well going forward. It's been trending up. I like Lennar going forward. Just wanted to get a home builder in there. Netflix, I've got iron condors on. We've done really well in Netflix over the past several years. But I like to trade iron condors in Netflix. It does trade between a range. You've got August and September on right now. We're still in that profit zone. We're at the bottom end of it, but looking for it to not drop too much further. It's at the bottom part of the trending range up and 613 going forward. And we've done well in Netflix. We're up 285 in the last 30 days. And we've got $690 in extrinsic left to collect. So what that means is we'll make another $690 as long as we've got one iron condor at 12 days and one at 47, but within that 47 days, we'll collect that as long as it stays between our short put strike and our short call strike. So that's the beauty of trading both sides. ServiceNow has done really well. They beat earnings. I've got looking to close out the August position. We're at 720. There's only a few dollars left in it. So why not close it out? I could try to eke out the last few dollars, but I'd rather take it off and, risk of recession, it could actually drop down below that mark as well if we get more bad news. But right now, the 780-770 September put spread is still in good position. And you can see that it's been trending up over time. They're a cloud services company, and Jim Cramer's had them on several times, the CEO, and you see him on CNBC as well. NVIDIA, big drop. I've got a 105.95. I've got two put spreads on. I think it's a good long-term bet right here. We're still in the profit zone on NVIDIA, and they've got earnings coming out on the 28th of this month. And last time they beat top and bottom line. My target's 130. It's at 107. Everybody's got it a buy. 125 is the target that these guys have. This is the Tasty Trade platform. There's a link down below if you want to check it out. But I like this one and Mumu. Palantir's got earnings coming out this week on the 5th, so it's Monday after the close. So that'll be interesting. I've got two leaps and calls on. I'm looking to close those out possibly before because they are so profitable. And it is a little bit above many people's, they think it's expensive right now. I don't necessarily think so. My target's 30. No financials available here, but they've been doing great. And I may look to close out the call spread, see how earnings come out, and then either buy another leaps if it moves down to go long, or if it moves up, sell more calls. Super Micro, these guys are expected to do really well. It's trading at 624. They've got earnings coming out on the 6th, so Tuesday after the close, and you can see many buy ratings. $1,000 or 1,022 is the target, so almost double where it's at right now. But they're huge in AI and expected to do really well moving forward. And yeah, 8.6 is the earnings. It was 8.13. They moved it in. Interesting. But I've got a put spread on 710, 700. So we do need a big move up, which could happen if the earnings come out and do well. But again, they were hit big time last week with the unemployment news on Friday. SoFi, I've got 11, 12, 13 of these deep in the money calls, 530 days out. So I'm just long SoFi. They had a big move up last week and then a drop on the unemployment numbers on Friday. But I like SoFi long term. So I think it's just a matter of time. TLT and TMF. So these are my bond hedges, and they're starting to do really well. You can see on the chart how they've been down. There's TLT, and then TMF is just a leveraged bond fund, and it's the long-term 20-year treasury. But they're starting to do well. They did well on Friday with that news, and you can see they were at lows, and now they're breaking out. So as interest rates get cut, it's going to happen, it may happen sooner than later. Sign of recession, they're going to have to cut them sooner and more often. So TLT and TMF are going to do very well going forward upon those interest rate cuts. So that's kind of my hedge. I'm looking to buy more. You can see I've got below the market a trade in for Monday, and again it's a leaps, and I'm doing one of each, TLT and TMF. Let me know what you're doing and how you're hedging against possible downturn due to recession. I missed Tesla. So Tesla has had a move down too, $207. I never like to bet against Elon Musk, so on down moves, I like to get long. You can see where 215 is the profit zone. I need a slight move up, but it had a big move down as well last week, like everything else. So what's nice about options, again, you just roll to the next month on these down moves, and then you can hedge with TLT and TMF. Ulta, same situation, 370. I've got two put spreads on in Ulta, but again, if you look at the ratings, target 478, and look at all these analysts with strong buys, and then the financials are so strong. Look at the balance sheet, the income and the balance sheet are great. So, and during a recession, Ulta, ladies are not going to skimp on makeup, so they're still going to buy that. That's something that you need. So I don't think it's a bad stock for a recession. But I actually went long with these put spreads after their earnings on a down move, and I thought it was overdone. And then again, we got the news, but I think long term Ulta is going to do great, so I'm going to stay long. XOM iron condors 110, 120. We've got the 120, 130 call spread and the 110, 100 put spread, and we're trading within that range. We're in the profit zone now. We've done well and made good money on XOM, trading within that range, and you can see that it's kind of been trading in a range, but I like XOM long term. So next week earnings, we talked about some of them, but we can go right over here, all earnings, and we can sort by date, and you can see Monday some of these companies. We've got Yum, which is Yum Brands, and they're coming out 8.6. We've got Caterpillar. Let me know if you're trading any of these. We've got Uber coming out next week. A lot of different earnings trades next week. So again, let me know what you're trading. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Mumu. Get your 15 free stocks. Leave a comment, ask a question. I answer everyone. Thanks for watching. I'll see you in the next video.